Hey guys, welcome to Pippin and Dippin Academy. I am Joe Von Grichten, and I got my partner here, partner in crime, master facilitator, master trader, master of the universe, Hunter, the Pip Hunter, Burkett.
What's
And
going on, guys?
so before we get going, please, if you have not yet, take a sip of coffee, hit your subscribe button. You'll see it here somewhere. Make sure too that you put in the comments that I subscribed. Hunter loves to write love notes back to everybody, and I love for him to read them to me and tell me. But more importantly, we just might have a special gift for you. So make sure you don't just hit don't just hit the subscribe button. Make sure you put I subscribed in the comments below as well. With that, if you have any questions, put those in there too. We'd love to get back to you.
Hit thumbs
Down
up.
below. So today we got something that's really powerful, and it's a lot of traders that are out there that are training. They use these tools. However, through our experience, we learned them through being taught by one of our mentors, who is a master market maker trader, and where we really embraced like how to properly use these. We were playing around with them. It's kind of like we were in elementary school and we got brought into graduate school with our mentor, and from there Hunter's just ran with it. And that's why I always want him to do this, because he is like, guys, I want to tell you something right now. I got to give props to Hunter, because I'm a lot older than him, and at the same time, this guy is, I got to give him props, because for one, not only is he like motivated, but he takes his stuff very seriously. It's like he got a second chance on school and the school of life, and he's all in on it. Like and that's why I always like having him train on this, because he remembers and recalls a lot more than I do when it comes to all this technical analysis. And I would be cheating you if I was the one doing the instruction. We were just talking about this before we did this, because he was like, hey, do you want to do the training? Actually, I don't, because I think I would be robbing you of what Hunter can give you. He is fantastic trader. He is fantastic at technical analysis. He is a true student of the game, and he's constantly looking to raise his level up, just like a professional athlete. Like, that's why I want Hunter doing this technical training and showing you what we're going to show you. But we're going to show you EMAs and the power of EMAs and what they mean and how you can leverage them, and how much they, like, when you add them to the chart, it adds so much value just off of 5 quick EMAs that he's going to show you today. So without further ado, and without rah-rah anymore about my brother and partner in crime, Hunter, I'm going to let him take over. And with that, it's all yours, Hunter. Go for it, brother.
Cool deal. What's up, guys? Don't let Joe fool you. I didn't get here by myself. You know, I had a lot of help from Joe. Like you said, he's older than me, and he's got a lot of wisdom. As far as mindset, he's been through a lot more. Raised 3 kids, and I mean, I've got 2 kids of my own, but they're very little. So just the wisdom alone and all the mindset hacks that Joe's taught me, along the way. I couldn't be more grateful to have him in my corner. I'm really lucky, guys. You know what I'm saying? I've got the drive, like he's talking about, but I also have somebody that's holding my hand as far as not veering off the wrong path. Because when people have that much drive, and you can back me up on this, Joe, without having the right direction from somebody else, you can crash and burn very quickly.
Yeah.
Because you're not aware. You're in tunnel vision, and you're not aware of the things that are poking you, and you're just running down the tunnel, right? So yeah, man, I'm going to get right into the EMAs. The EMAs are powerful tool to be using in trading, especially in market making. You need these to trade market maker, and I'm going to show you how you can utilize these things for support and resistance, how you can utilize them to find out where you are in the market on the higher time frame, and everything being on the lower time frame. And the reason why we use indicators, guys, is because it's easier. It collects data faster. You know what I mean? You don't dig a hole with your hands anymore. You use other things. You started to use a shovel, and then a shovel resulted into an auger, and then an auger resulted into a backhoe, and then tobacco, and then they just started creating more equipment, right? They're using indicators. That's what this is. We use in the market to collect data faster so we can start to get in trades faster, right? And this is like analogy. You know, when you start running without shoes, your feet's going to start to hurt, right?
Mhm.
It's a given fact that it's easier to have shoes on to run, right? It helps. Right. So I'm going to share my screen, and yep, here, and boom, here we go. So the first thing that I want, and this is a perfect example, I'm on the 15-minute time frame, right? Now, your blueberry, I'm going to start with, you know, the very first EMA, okay, which is your, I know I said blueberry, but which is called mustard, okay? This is your 5 EMA, exponential moving average, okay? Then you've got your 13, which is your catch-up, we call catch-up. And the reason why we're naming them names is so they can be more simplified for you to understand, right? So you got 13 EMA, and then you got your 50 EMA, and then you've got your 200 EMA, which is your white one. We call mayo. We call this one aqua, water. And then you've got your 800 EMA, which is your blueberry. Okay. Now these all represents, you know, they all have their purpose, right? And this is the reason why we run them. Your blueberry and your mayo is more of your bigger moving averages. You know, most of the, as you can tell, that they act as support and resistance. As you can tell, that the big moving average, the 800, is coming in here, and boom, what did it do? Pegged off of there, boom, it came back to it, pegged off there, boom, came to it, and pegged off there again, right? So you can use these as support and resistance if you didn't want to have a bunch of boxes or lines or on your chart, right? And as you can tell, look how they these moving averages are really respected in the process of the movement of the market, right? So you've got to take these in consideration and understand what these actually mean. Um, so, like I said, you can use them as support and resistance, but me and Joe, we still use support and resistance because sometimes that they don't come to the same area very often. So we basically use these as to figure out where we are in the market as far as our trend and as far as um, where we're at in the time frames, right? So, and I'm going to show you an example. Okay, we're on the 15-minute time frame, and what your 50 moving average is, and I'll explain these two later. What the 50 moving average is telling you what current price is doing at that moment. Okay. Now, your 50 moving average is your favorite moving average. That is your friend. Okay. When they say trade with the trend, trend is your friend, the 50 is your friend, right? The 50 is a magnet. Price is drawn to the 50. Just like if you were to draw fibs, if you guys are seasoned traders, if you're drawing fibs to get entries or to figure out where price will reverse at, same thing with the 50. Okay. Just like if you got the PRZ zone on the 50 fibs and it's the 50 uh 50 line on the fibs, it's the same thing with the 50 moving average, right? Okay. Now, remember, 50 moving average EMA is what current price is doing at that time. What I'm going to do is showing you an example of, okay, that's what current price is doing. Now, you got your 200 EMA, which is a step above the 50 EMA, right? That is telling you what it is doing on the hour time frame. So if I move to the hour time frame, your 50 moving average, the blue aqua, is going to move where this is at. Okay. Then your mayo line is going to move where the blueberry's at. Okay. Your blueberry is telling you what's happening on the 4-hour time frame. Okay. So I'm going to switch to the hour time frame and I'm going to show you. So this is on the 7th of December. Okay. We're going to move to the hour time frame. We're going to go to the 7th and look what happened. Okay. Your blueberry was here coming across, right? Now your 50 was where your mayo was, right? Do you see how easy it is to understand where you are in a trending market on the hour time frame? I mean, on the lower time frame, you don't have to scale up. You can just look at your EMA and say, "Oh, I'm moving down. I'm in a downtrend. I'm in a downtrend. So what do I need to go to the hour time frame for? It's telling me already on the 15-minute time frame right here. So, and the price is moving down currently with your 50 moving average, and you're below the Mayo, then you're in a downtrend on the hour, current price, and on the 4-hour. So what would be your indication of what you need to do in this type of environment? You need to be taking sales, right? You need to be looking for sales only, right? So, and even as it came back up here, bounced off your blueberry, started to drop. Because remember, guys, what I told you, this was a massive drop. Okay, what is price drawn to? It's drawn to the 50. You see how, and price is always going to correct itself. You know, once you get massive drops like that, your price is always going to correct itself. As you can tell, guys, in the market alone. I'll just go to the hour timer and show you. Price goes up and it comes down. If price goes up and it retraces. Price goes up, retraces, price goes up, retraces, goes up, retraces. So you're always going to have a correction. And as you can tell, look here. Price went up. This is, you know, a possible reversal right here at this area. Okay. So reversal happened here from the downward movement. Boom, it comes up, price drawn back to the 50. Price goes up, price is drawn back to the 50. Price goes up, it went to the Mayo, but that's okay. Still, price is drawn to the 50. As you can tell, it's going up, coming back to the 50. Coming up, going back to the 50. Going up, come back to the 50. So that's the fit. Like I said, the 50 is your friend. As we came down here, look here. Price came down and broke the 50 as a reversal happened here. Price went down, draw back to the 50. Price went down, draw back to the 50. Price went down, draw back to the 50. Price went down. You see the drift here? So use this 50 EMA and use the EMAs to your advantage of knowing where you are in the market and know what kind of trend you are in, right? It's gonna transform your trading, knowing this right here, and it's gonna be a lot quicker, a lot faster for you to analyze a trade instead of coming over here. Yeah, I do got support resistance drawn up, but it's going to be a lot faster for you to understand where you are in the market, right? It's gonna help you tremendously. So remember, you know, this is the hour time frame. So let's do the analyzing here. So what would this? So this example. So here's your Mayo, right? Here's your 50. Well, that's current price, right? That we're on the hour. So this is what current price is doing. It's down. Okay. You see how price is moving down. Now, this is what it's telling you what's doing on the 4-hour now, because you're on the hour, right? So the Mayo is telling you what's doing on the 4-hour, right? Now the blueberry is telling you what. That's what it's doing on the daily, right? This is an upward movement on the daily. So an overall big map, a big perspective in the market, you're in an uptrend, right? So you got to look at that. You got to look at that. You know, I don't really trade off the daily. I'm more of an intraday trader, me and Joe both. But you know, these EMAs help us when we're on the lower time frames, 15, 5. We understand, you know, okay, here in this day, when we're trading in this day, that was a Friday. Let's just go here. Okay. So as I know what current price is doing here, we come out of Asian, boom, we get an M pattern here, drop, bounces off the Mayo, right? So it bounced off the 1-hour time frame, 50 moving average, right? So if it bounces off here and we're still in an upward movement, now what current price is doing is moving up because we're above the 50 again, right? So you should only be looking for buys in here. You're in an uptrend. You're on an uptrend on the 15 current price, on the hour, and on the 4-hour, right? So why would you be looking for any type of sales in this? Like, why would you be enticed to do any type of sales in here? You see what I'm saying? And the reason why we say this, and the reason why we're teaching this about EMAs, is to make you understand high probability setups. This is going to help you find high probability setups. And that's all the market is, guys. It's probability. If we can get you on 80-90% winning side, you're gonna crush the game. Understand. You're gonna crush the game. Is there ways of trading this stuff here? Yes. Counter trading? Yes. Ways of trading it, but it takes a different type of you have to learn a different skill set as far as strategy wise, right? You have to understand what's happening here to trade the counter trades, right? You have to understand, right? Because you remember, if you're counter trading and just say let's find one, Joe. If you're counter trading, right, and just say you got a big drop out of the sky. Let's just say here, you got a big drop out of the sky, and you start to see reversal signs, right? Where do you think it's going to go? Right? You had to have that in the back of your head. Where do you think it's going to go when you're on the 15-minute time frame? You know, it's either going to go back to your 50 on your 15 or your hour 50, which is your Mayo, right? Because you're on the 15-minute time frame. So if you were to counter trade like that, you have to understand where price is drawn to, right? So it's really simple. It's really simple. You use it as you can. I mean, look at this, guys. Look how it respects these areas and these EMAs. You know what I'm talking about? It's like you got a 50 moving average running through here, and look at this rejection that happens. Boom, 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 boom. Got a nice bearish engulfing here, and boom, it drops. Right? So use these to your advantage. Use them to figure out where you are in the cycle of the market. Are you in an uptrend? Are you in a downtrend? That's only going to help you identify high probability setups, guys. I mean, it's really simple. It really is simple. And like I said in the beginning, use this stuff so you can collect data faster. So you can collect data faster. Oh yeah, I wanted to go over too. It also helps you identify it when you're in a ranging market. When the price is moving sideways in between EMAs like this right here, okay? When price is just moving across it, in between the price, 50 and your 200, you're in consolidation. Just stay out. Just don't even trade it. You want to be in something like this, in an upward movement. You want to be in a trending market. You want to be in something like that. You know what I mean? Or something like this. And once you identify that, and you guys, if you don't have to trade 20,000 pairs to make money in the market. Find 3 to 5 pairs and be done. You know, me and Joe literally trade 5 pairs, and we make plenty of money. So,
well, that's the big thing is like right there, guys, when you see that blue 50 moving sideways and it's somewhat flat, it's not going up, it's not really going down. It may ripple a little bit, but it's more or less just going sideways. Stay out of the market.
Yeah, exactly.
And trust me, there's other pairs to get into if it's doing out on one pair.
Here's another concept, guys. Like, and I'll show you. You know, we trade sessions too as well. You know, there's a lot more to our market maker method than what we're just showing you. We're just showing you a piece of it, right? And as you can tell, like Joe said, the 50 moving average is coming here sideways. So is the 200. But look at your TDI. We trade the TDI because that is in with market maker. You see your market baseline, which is your yellow line. It's riding the 50. What is the 50 doing? The 50 is just sideways. And so is the market baseline. And it's riding the 50. The 50 on the TDI is the 50 on the price, right? As you can tell. There's other periods that you can set it at to make it more accurate, but we like the 14 period on our RSI because it's giving us data faster, right? We want to see what the RSI is doing faster. So like right here, do you see how the RSI and the TDI come up and almost tag the 50, the black line on the TDI? Look how it almost come up and tag the 50 on price. You see what I'm saying? So that's the thing about it is you can use this to your advantage too. So when you got multiple confluences together and multiple rules, and you start to see your accuracy go up because you're disciplined and you got your rules and you're taking trades just because you're checking off boxes, you start to figure out that you're getting paid by waiting, patience, and being disciplined, right? And that's the key to Forex. You're getting paid to wait. You're getting paid to have patience, and you're getting paid for discipline. So
The
once you have,
reality is, just look at it this way, guys, just to kind of piggyback on what he's saying. Just think if you waited 4 hours to take a trade, and then the profit that you made on that trade waiting for 4 hours paid for your whole day of the salary you make at your work or your hourly wage at work. Wouldn't it be worth it to wait 4 hours instead of going and grinding for 8 hours, exchanging your time for dollars, time that
yeah,
you don't get back? I mean, for us, like we have it set up where we have like, EAs are, sorry, not EAs, indicators running where they're throwing us signals. So we're not even looking sometimes at the charts until we get a signal. And then we go and look, we do our analysis, and we either enter or we don't enter. And then we wait for another signal.
yeah,
Sometimes we sit in front of the computer, but it's very rare that we sit in the computer in front of the computer for more than, a couple hours at a time. It's usually we're in, we're out. And that's what these things will help you do, because you can set alerts on TradingView for when you have certain crosses here,
yeah.
which is really, really cool. And then you
And
can add in the TDI like he's showing you. And now you've got, 3 to 5 major confirmations, and you're ready to enter trades with confidence.
yeah,
So,
it's really powerful. I say this in some of our other videos, guys. It's really easy to make money in this market, and how fast it can happen. And with the amount of leverage we have nowadays, the brokers we have, and you really think about this. I try to make people understand this and put it in perspective. Do you understand that $275 a day is $100,000 a year, and you can make that within minutes in this market? And you think about it, people literally work 12 hours a day to make that type of money, and they work their ass off.
and have no free time to spend that money, spend it on the people they care about, let alone
Yeah,
spend it on themselves. So
yeah,
that's a great analogy,
yeah,
Hunter. I mean,
and
you can't beat it.
that's just going back to the fact of growing, learning a new skill set. You know what I'm saying? Well, look what you had to do. That's what I always used to say. People will literally go all out and go the extra mile for their boss, but they won't go the extra mile for themselves. So
Well,
uh,
I'm looking up right now. Let's see. What is the average median salary? So,
sorry guys, I got my son here, so I took off.
oh, I love that. So the average median salary is roughly like across the US is roughly about, it looks about like, let's see, the median salary is $92,800 per year, which means that half of the population are earning less than 92% or 92,000. So the reality is somewhere in the range of about $46,000 a year is what half of the US population is earning. But the other half is earning less than that.
Yeah,
And you could come in here and take trades and be hitting that, and start with little to no balance to get going, because some brokers, the leverage that they allow, I mean, you can take $100 and turn it into a weekly income, a monthly income, very, very easily.
yeah. So
um
did I cover everything, Joe?
yeah, man, that was fantastic. I just love it, guys. The big thing is, if you have any questions about EMAs, the 5, just to kind of review what Hunter said. So we've got the 5, which is the mustard, the yellow. We got the 13, which is the ketchup. We got the aqua or the water, which is 50. We got the 200, which is the mayo, the white line, and we got the blueberry, which is the dark blue line there. All right. Uh, those will help you out tremendously. And if you have questions, definitely you can join us in our Pippin and Dippin Academy to learn more about how to use these and how to start doing chart markups with them. So you start recognizing entries, you start recognizing patterns for entries and patterns for staying out of the market. There's lots of good stuff there, but definitely we also have a TDI training. If you haven't seen that video yet, we'll put it in the comments below, because Hunter just kind of included that in here. but there's a good 30-minute video where he walks through what everything means on that TDI indicator, and how to use it in your trades. So with that video and this video, you can go out and run with it. Or like I said, you can join us. You want a little bit more one-on-one, or in a group format, a community, everybody striving together to become better traders, then join us at Pippin and Dippin Academy. Other than that, Hunter, I think that's about it, right?
Yeah, I just wanted to go really quick. I didn't hit on the 13 and 5. Guys,
Yeah.
we use 13 and 5 as an entry. Because as you can tell, most of the time, and guys, I do not take this set alone.
Right.
The 13-5 cross. You're gonna lose miserably. Does it happen good trades? Sometimes yes, but when we have multiple confluences with our trading set and Pippin and Dippin Academy in our strategy, we use that for our entry. And the reason why is because it's most of the time when we get our set, it's when that crosses, it's a collapse of price, right? So as you can tell, like right here, collapse of price, right here, collapse up. And when we get our set, and that's just an example. That's not our set, but I'm just saying. Let's just find a set that we take, which me and Joe trade market makers. So we trade M's and W's. Continuation trades, break of structure, bounces. So I'll find a pattern. Let's see. Let's go 5 minutes. We'll probably find a lot factor on 5 minutes. They happen all the time on 5 minutes. I want to find a really good one.
See, I told you guys, this is why we want Hunter doing this, because he'll geek out on this. He loves showing people like examples and showing like good entries, bad entries, all that good stuff, using the tools, like you said, using the shoes. If you're running without shoes, it's time to start running with some shoes.
Yeah, exactly. So like right here, guys, this is an M pattern. This is what me and Joe trade. Okay. It's a reversal in the market. It's telling you when there's a reversal pattern near. So basically like a double top, right? I consider this an advanced anchor. The reason why is because you got a little bit of a higher high here, right? But look at the TDI. It's telling you something different, okay? You've got divergence. This is called divergence. Like Joe said, he's going to link the TDI video in the description below. And we'll also link the divergence video in below. So you can watch those videos so you can understand what we're talking about. Okay. And now I'm gonna go back to the what I was really talking about. See the 13-5 cross as it's happening. You get nice bearish engulfing. You start to see collapse. Price move down, and then you got your 13-5 cross. You can get on the collapse, and boom, what does it do? It moves in your favor, right? And this is a 5-minute time frame, so you're only scalping here. You're not looking for much pips, but guys, that's a 38 pip drop. You know what I mean? So this is and we have other confluences, which if you join our academy, which we'll teach you everything that me and Joe know that we've been taught by very successful high-level 7-figure, 8-figure traders, and we'll get you on the track of where we're going as well. So
hey Hunter, real fast before you go away from that. Okay, you just said that was 38 pips. So for people that don't know trading or are new to trading, like let's talk about that. Like, if you're running like $1 per pip, that's 38 bucks. Yep. And how many candles was that? That was on the 5-minute, right? So that was about,
that was only 4 candles.
4 candles times 5, that's 20 minutes. So in 20 minutes, if you're running $1 per pip, that's 38 bucks. So you just made 38 bucks, which we know right now is more than well above the national average for an hourly wage.
Oh yeah.
So on the 5-minute, this happens multiple times on just about every pair that's out there that you could potentially trade. So how many times you have to, make 38 bucks to replace your income, or even make more money than you're making right now on your hourly wage or your salaried job? Those are things that you need to take into consideration. Now, you saw the disclaimer at the beginning, this is purely for educational purposes and to show you what is potentially possible. It doesn't guarantee that you're going to get there. All right. But the reality is, if you become a student of the game like Hunter, and you recognize like these setups, it becomes easier and easier. And like I said, in time, you could potentially replace your income, double, triple your income, because you could do this on the higher time frame too, guys. It changes it changes a little bit different. It just is slower moving, but the game is still the same. You still use the same tools, the same shoes. It just moves a little bit slower, so that while you're working your 9 to 5, you're making money at the same time too in the market. You're just swing trading, so you're going to hold trades for longer than a day. We don't do that very often. Typically, we trade, on the lower time frames. We look for setups on the higher, but we enter on the lower time frames because we want to get in, get our profit, and get out. Yep. And you can see right there in 20 minutes, if you're trading $1 per pip, that's $38. You pay a small commission to your broker, so you probably made somewhere around what, 30, $36, probably somewhere in that range, 36, $37. And you're done. You can walk away for an hour, come back in an hour, and you can look for more setups again. Do that 3 or 4 times a day, or as many times as you want within the timeframes that are good to trade in. We recommend, that's another thing we're going to give you another nugget here. Asian is, you got to be really careful in Asian sessions. We highly recommend that you don't trade Asian session unless you're trading Asian pairs. We would highly recommend that you trade either London session or New York session. Those are when there's more volatility in the market, which means the price action moves more. Typically what happens in Asian is it's a consolidation period. It's when the market makers are gathering up liquidity and setting the trend for the day, for that day. So you just want to be really, really careful. Those things can increase your win percentage. Like we've had people that have come into our community and they trade all day long, and they were like break even traders or even losing. They stopped trading during Asian and now they're profitable, and we tweaked a couple other things too here or there. But those are the things, guys. Simple little things like that we can help you out with. But it starts with using shoes. I mean, Hunter couldn't have made a simpler analogy. It's like, do you want to go and run in the street barefoot and see how long you can run before your feet start breaking down? Or do you want to run pain-free with shoes on and run down the street? Yep. Or if you're like me, you can't run anymore. But that's why I rely on Hunter. He can go out and run for me and teach me the way, show me the way. The other thing is, guys, whatever you do, get a mentor. Whether, if it's not us, get somebody that has been profitable in trading. Don't take advice from somebody that doesn't know what they're talking about or hasn't been down the trading rabbit hole for some way, shape, or form. Because you can lose a lot of money really quickly. We're not gonna lie, but you can also, like Hunter said, you can be very profitable and be in and out of the market with confidence, using shoes or EMAs in this case, or the TDI. We'll put all those in the description though. So with that, Hunter, I'll let you take us home, man.
Yeah, that's pretty much it, guys. Remember the what I taught you. If you got to go back and watch the video again, understand what the EMAs mean. 50 means current price, what it's doing. In this case, 15-minute time frame. This is what the hour. That's the 4 hour. So you just basically just building. You're just using the bigger moving averages the next time frame when you're on the lower time frame, right? So, and then you also use it where you're finding out where you are in the market, right? So if you're below all EMAs, you're in a downtrend. If you're above all EMAs, you're in an uptrend, right? So and then figure out how we can teach you how to counter trade, and you'll be fine. So yeah, that's pretty much all I got, dude. EMAs are simple. Yeah, we went a little bit down the rabbit hole telling you guys about what the possibility of, don't get me wrong, Forex is risky, but the possibility of, coming in here and crushing the game. People do it all day long. It's just, we like to, me and Joe both like to go on rants, and we're sorry if the video's long, but
but hey, man, there's tons of nuggets, like he said. you know, those EMAs are going to keep you out of trades. If you think that you should be, you're thinking it's a buy, and you look at the EMAs, you can see that it's clearly in a downtrend, then you should only be in a sell. You know, that should just eliminate the thought that you're getting into a buy.
Yep.
Now, don't get me wrong, there's W's and where you have your anchors where the trend reverses. So you'd be looking at it, but you still use the EMAs to help you get in and navigate through those trades. So if you have more questions, definitely put them in the comments. If you're ready to get started right now, we've got a link in there for Pippin and Dippin Academy. Come join us. Come join. We've got hours and hours of training. We do weekly live training. You have access to Hunter and I. When you have, you know, simple questions, when you have complex questions, we want to answer them all. And if we don't know the answer, we definitely know where to go find them. So with that, guys, thank you for stopping by. Pippin and Dippin Academy. We were so excited that you stopped by, listen to us. Did I tell you? Was I right? Hunter loves to geek out. That's why I have him do the technical training, because this guy just loves it. His passion is not just for Forex, but it's to help people. And that's why I love the guy. And I shared him with you guys today. So with that, thanks guys again. And don't forget, subscribe. I subscribed in the comments. If you have questions, put those in there as well. And until then, we'll see you on the next training. Take care.
Thanks, guys.